Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
That's pretty good. Um, just kind of a little bit light, looking for spots here and there. I think there's a lot of stuff that is setting up that's going to take time. Anything software related, it's really easy to get fooled by some relief that those are getting, and then they just come right back down. So you just kind of have to think about it in 8 months from now. What are they going to look like, and what do you want your average to be? And we have enough experience with some of those that I think you get a pretty good picture of where you want to be for an average. And none of that works for options very well. So like snow, I mean, it could stay in the 130s for a long time. So you don't want to get 180C strike in August and just watch it
Yeah,
slowly bleed out. So I'm trying to encourage people in that direction. Talking about shares a little more. Um, Still plenty of good stuff. Nvidia's doing some kind of, I don't know, sort of artificial things to the market right now with the split coming up. So I think we need to get through that, get some clarity on that, and that'll sort the chips out a bit. Um, but yeah, not a good spot to short them either.
yeah. I'm obviously a big, big vacation break for me. Finally coming to a head here. I noticed during this last, like, let's say 4 to 6 weeks, um, the long term thesis, getting a small position in things and just selling on the pops have really been successful for me. Um, Through our work, that's really, really, really easy. Um, and I kind of been taking advantage of that. But got to get back onto the day trading stuff this week. Still kind of live, to be honest with you. I'm still living off that Nvidia win from last year. Sold that what 2 ERs ago, 1 ER ago, beginning of the year, and I kind of told myself don't mess that up, take it easy for the rest of the year. Um, so yeah, I'm kind of that point now where I'm rested, I'm relaxed. Uh, Played entirely too much golf last week, and kind of ready to get back into it. So um, what I'm seeing is definitely like, I mean, well, we talked about it. Let's be honest, we talked about it probably in April that those big names are going to level off. We'll get some broadening in the market in certain sectors. We nailed gold and silver. Um, so I kind of think that has to, that can't happen forever.
Yeah.
Nvidia being the anomaly in the market with that. I believe the split's Monday, correct? I think it's Monday.
Yes.
Um, yeah, I think that might change a little things. Maybe get a pullback in SPY finally. I mean, we're just at all time highs on pretty much everything. We're on year highs, year to date highs on almost everything. If you just do the last year, everything's pretty much up. So um,
Well, and
go ahead.
yeah, and so yeah, two things on that. I mean, so for Nvidia, I mean, the cheaper stock price, encourages people to buy more. Um, you can get fractional shares anyway, so I don't know how much that's going to impact things. It's going to change options quite a bit, and I would just caution people that after a split or reverse split, it takes a while for options to sort themselves out. Because all the strike prices change, and you kind of don't know what it's going to do to option volume. And Nvidia option volume was already very, very high, so I don't know how much that's even going to change that, because what basically, like, you can trade closer to the money for cheaper. That that's the only thing. But people were buying ridiculous out of the money options on it every day anyway. So I'm not sure how much that's going to impact things. CrowdStrike got added to the S&P 500. Shout out to Secondary Moves for actually, he posted that before it happened, so he was on top of that. Popped for 5% or so. We've seen that that can pull the stock back pretty hard after that initial buying sorts itself out, those forced buys. So software still is not in great shape, but getting there. And then lastly, oil. Uh, People are kind of really down on oil. It's not really in any kind of significant danger of some big breakdown to me. I've talked about 72 as being a pretty big spot. It's 75 right now. Flow wise, those are looking pretty good. So I think we want to stay on the names we know, the trades we've done before, and some of those are going to be easy mode. Uh, Dino comes to mind on that.
Kind of polar opposites of sectors there, just from my perspective. I mean, software as a service is definitely something that you're going to get from the bigger companies.
Yeah,
In prime conditions, you know, they sign up for everything. In this current restructuring of our business, they're trying to save a little bit of money, cut the fat, whatever you want to call it. Those are usually first to go. I think we talked about it a few weeks ago. Um, how you know you kind of can use certain functionalities with one service, so you don't need the specialty service. And those more
yeah,
well-rounded ones are the ones that people are keeping. But that doesn't necessarily. I mean, that's retention. That's not necessarily growth in your company. As to where oil for me, we're going into summer. That's when I even before you. That's when I was always interested in the gush in the oil trade. Um, so I think summer's going to be good. I just got done traveling, like I said, 3 or 4 trips, and there's people everywhere. People are out and about. That's the experience trade as we talk about, or experiences. Go touch grass trades. Those are very. I don't see how those aren't going to do well. There's just a lot of people out. So how do you get around? You get around on oil. You get around on planes. You get around on trains. Stuff like that. So I think that's going to definitely be something that does well, definitely going into Q3 here. Software as a service, on the other hand, I don't see an end in sight. I mean, maybe you do, but I don't see an end in sight from companies restructuring to try to stay afloat until these rates do come back down.
yeah. So okay, so basically, in bearish conditions in a sector, the good ones stand out more. It's easier to see. So in that respect, it was it was hard to get back into MDB and Snow and Crowd when they were $100-$200 ahead of above our entry on
Yeah,
some of those,
yeah,
and so that was when things were good. Well, now that things are bad, they hit some spots where you can see the selling get the seller exhaustion, the puts get kind of tired, the puts flip bullish, and you can start to get some positions built up, but you just can't look at it like I'm going to take this 40% in 2 months. That can
yes,
happen, and
yes,
you want to be in it if it does happen, but you can't enter it with that in mind. And by that I mean you can't get an option at a strike, you know, 30% above where you are. You want an option like that, it's going to be Tilray or something like that. Um, so that's what I would say there. And then on the energy side, um, we talk about oil, natural gas, uranium. That's the three. Um, Solar's kind of its own thing. I wouldn't even really look at solar as like an energy stock personally. It's more comparable to real estate in terms of sensitivity to rates. That's all that matters. It doesn't, it's not the price of sunlight. Obviously, it's not even really the price of making those panels or anything. It's just the anticipation of better rate conditions. So uh, the safer stuff, natural gas knocking on the door at $3. We were talking about that under $2, and there were plenty of those combo stocks that we talked about that still have some good entries that I think we should be looking at too.
yeah. Not necessarily related to that, but something we cover well. And I've been, I mean, I wrote it down as soon as I thought about it. I was like, can't wait to talk to Professor. The silver pullback. I mean, we're still above levels silver prices wise that we were looking to hit as targets, and the
Yeah.
charts just all had really big pullbacks. Um, is that over, or is there? Do you see a reason for that pullback, or did we just get overextended? What's your thoughts there? Because those
Um,
charts are in great shape, and now we have established a range, and that's usually what I look for.
yeah, I still think 36 to 38 on silver is probably where we end up. Um, and so to pull back under 30 isn't really that big of a deal. The thing is, like, the miners take an oversized pullback, as silver pulled back. And
Yes.
so what I look for is just the same the same strikes they bought last time on AG and and stuff like that. And I do see them reloading a bit. It was in my sector focus notes, and I think psychologically, I mean, maybe half the room that's active posting was kind of like, damn, I sold silver early. It's not letting me back in. And as bad as it might look with the pullback, it's like, well, here it is. I mean, it's going to let you back in. So um, those uncomfortable buys that we talk about are kind of where we're at. And option side on silver, if you buy anything out of the money, I mean, that's you're being you're being an asshole, as we say, because an in the money leap on the thing is maybe $40 more, and the the option chart is just 10 times more favorable to you if you do that, or your broker will let you buy shares and that stuff too. But yeah, I would say we do want to stay on those. A 6% drop in one day in silver, that's pretty big, and even just to
Yeah.
get to mid candle is likely to happen within a couple of days. So keep that in mind.
Yeah, I definitely seen it that, and then the same thing. Well, I guess this is energy. Same thing with uranium. I know that pullback's harder to, equate to exactly what happened because so much was done behind closed doors. But it seems like we got the same thing in that sector as well, towards the end of the week.
Yeah, the it made the move to to 92. 100 is still it's the number you're looking for. Anything in the mid 80s is really no big deal. I mean, you just got to keep in mind that so a year ago it was like $55 per whatever that unit is that they do it. And so it's still way up. I think, yeah, to me, the like mid 80s is definitely possible. Flow is still there. The leap flow has not budged. So everything, all the 10, $12 UEC, UUUU, all that's still there. CCJ is just still checked out. Kind of hard to get into that one, but UROY obviously is a newer one for us. So yeah, I like to see people building there, um, and again, you're looking 6, 8 months, a year from now, because any news on nuclear is going to likely be positive. Um, that is firmly being looked at as like a green energy source these days. Plants are going to fire back up, but you can imagine like starting up business again in that sector. You're dealing with a lot of government stuff, so it takes a
Sure.
long time to get going.
So the spot price, it's pounds, by the way. LBS is what it
Okay,
says in the
yeah,
thing.
yeah.
So I think that's what it is. But you're more of the spot price really isn't going to move the stocks like we are anticipating. It's going to be more of a news event.
Yes, I think so. And what you want with the spot price is you don't want like a full breakdown to 72 or something. Like you want it to stick in the 80s. Keep 100 relevant, because that's where the real breakout's going to happen, in my opinion. If it busts through that previous high, it can just grind up for months.
Yeah, I
So
mean,
you want that within striking distance.
looking at the 1 year real quick on that. I mean, we were down at 60 and we just ran to 110, kind of pulled back to this 85 level, which seems pretty huge. And we've been there all year, give or take
Yeah.
$10. But it's been to the. I mean, the chart looks strong in that regard. Like kind of 85 is the floor, with limited range currently. So that does make sense. How maybe some people that got into it early are I'm on board with it. They're not patient with it, and that creates a little bit of selling in that environment. You kind of see that with weed too. Like they're gonna legal, they're gonna change the weed price or the classification on weed. They're pretty much all in agreement on it. They just haven't pulled the trigger for some reason, and those charts are kind of pulling back as well. So I think it's more of impatience in the market from what you're saying is what I'm hearing,
Yeah.
or what I'm seeing from what you're saying is just people aren't patient for those moves that do take 6 months to a year. They want their money to make it, especially the big hedge funds and the and whatnot, and people that are in charge of other people's money. They promise them so much gains on the year or whatever, and they got to deliver, and that's probably not the trade for them
And
currently.
uh, yeah, and I'll say too. I mean, I've been following uranium options for a long time now, and UROY was never on my radar. Never came up in options, and now all of a sudden it's so active. The people who got in early on CCJ,
Yeah.
they're looking to spread their money around in the sector a bit, and so that is exactly um, what that is, and so that's those are the ones we try to find and build in, and then you just have to wait. If I see whales being patient, I'll I'll be patient with them. Would rather have shares than options in those setups, but I think there'll be something there for us.
Yeah, it's definitely
I had
part of
a
following big money right there. Go ahead.
Yeah, yeah. I want to get your thoughts on China real quick. I think we've done really well with it by um, keeping our focus on just a couple names. Like China as a whole, as a sector of stocks, has been erratic, and so Hang Seng has pulled back under 18,000, a little bit over it, but anyway. But when it was popping off a bit, people were really adamant that kind of like Chinese stocks are back, they're going to have this great year, and to me, like this pullback, we're kind of at a decision point where we could head back to those lows, could move up. Obviously, kind of news catalysts and things. So what's your approach to Chinese stocks right now?
I mean, it's kind of an individual sector thing. But
Yeah,
if I was gonna make a statement overall on China, um, it would be that their economy is dependent on a lot of other economies, but their businesses are dependent on their government. So things can change there rapidly. They really really can, and certain sectors probably do better. I don't think we're ever gonna see. I really don't think, unless there's some like you'd need like a North Atlantic Treaty style thing with China to get like every China stock to move at the same time. So it's
yeah.
always going to kind of be fragmented and sector based. But then you watch their news for where they infuse money at. So they're still kind of in that winners and losers cycle. But you know how I always say, like, if right now that November low is still kind of what I look for stocks to be underwater. So if something ran from let's say like 60 to $100, but it pulled back to 70, you're still kind of above water of that November low. So that's more what I'm worried about in individual names. But until we get sector clarity or a reason to trade a sector inside of China as a whole, just you're still kind of picking and choosing for me.
Yes, and an approach I see that I don't agree with is to take something like Baba and look at their PE ratio and say it's like,
Yeah.
this is a value stock now. Um, to me, that's just never going to be the story for them. So I would avoid that kind of thing. You're not. This isn't Procter and Gamble. We're like the fundamentals are going to kind of drive the car for you. So yeah, so I'd be careful about that. Like 90% of my China stuff has been go to for me, just because it was one that hit big and haven't really been back much. But yeah, I would just exercise some caution there. And Twitter is usually a pretty good inverse on China when they start getting bullish on it. So
I think
I
you are
watch that.
better on like the education names or the go tos or maybe like
Yeah,
the casino. There's just some sectors
or
that are good.
XPEV when I see the big out of the money stuff,
Yeah,
that's
because
been
well,
good.
it
That's
has
been good.
range where you're just not
Yeah,
Baba's not gonna go to like 110 overnight. Um,
right.
it just had they have better range. Go to is a great example. Like again, if you go back and look where we were $2 in November. Yes, we ran to 8. Yes, we're at 5 now. Yes, we're looking for 450. But for me, like if you only look at 2 or 3 weeks of that chart, it looks like a disaster. But if it
Yeah,
the big picture, it was probably overbought there for a while at 8. So you just kind of wait until that lines back up. Um, in the individual names, there it's I think that's where we can be a little bit more cutting edge, or a little bit ahead of the curve, where when China does come up, to really figure out, all right, which 2 or 3 is it, because it's not going to be them all until there's some pretty big political changes, or just
yeah,
some lack attention, I guess, to say. I mean, I thought semiconductors eventually would pan themselves out because of some kind of an agreement between the two countries, and then Taiwan
right.
not becoming an issue, but that's just not going to happen. They both kind of have their own. Our current administration and their current administration both kind of have a plan on how they want to do things, and they are not the same. And that the same could go for EV. Why do we not have neo EVs in our country? The same
Yeah.
thing can be said for that. Um, so yeah, yeah, and
Well,
until we're on the same page, I think we have to be picky with individual names.
well, I know on GoTo, I did catch the last 6 to 8 move. You kind of weren't on board with that, as not that you were saying it wasn't going to go up, but like this isn't like the entry I would want on this, because it was kind of option driven. And so you're saying like in this pullback, we get back to a spot, that 450
At
area,
450, yeah, buy it
and
under that.
yeah, yeah. So yeah, definitely, and you're gonna see that in a couple of these Chinese names, even a couple bigger ones like Bidu maybe, and um, with that, Bidu ran to 112.50 from 95, and we're right back at 95 again. Um, so yeah, it's I think the biggest mistake people make, um, being a late bear, is about the worst thing
Yeah.
that you can do. So, psychologically, recognize that about yourself. Like if you feel yourself getting bearish, is that as they've pulled back for a week and a half already, and you missed it, and now you're looking for it? I mean, it's just a where do you want to take that thing? Like if you wanted to short BDU at 95, do you really think that you're going to take it what to 92? That's not really much. 80, probably not. You're probably not going to take it to 80 from here. So um, limited appeal on shorts like that to me.
Well, and I think that goes both ways currently. I mean, your upside's
Yeah.
kind of limited as well. So, I mean,
Well, yeah. I mean, so Nvidia, like, it's going to split and everything, and yeah, from the split, it can certainly go up. But those chips that they're charging 35K a pop, that you know MSRP's 7 grand, but they can charge that premium. How much longer is that going to go on? And you just have to keep in mind that that company is going to continue to do great, but to match these growth numbers, is not going to go on forever. So there's not a short entry there, but there isn't much long either to me that has appeal.
on the video, you're saying, yeah.
Yeah, yeah, yeah. It's just, I mean, you can't enter with confidence other than to say it's been going up and going to keep going up, and that's not really where I like to be in a trade.
You want to
So
know
I
my
like,
no- you want to know my note on the video? I'll tell you.
what's that?
If it holds 100, buy in
That's
September.
it. Yeah.
Buy Q3.
Yep. No,
I
that's a
mean,
good number. That yeah.
and I'm giving myself some time to kind of let the bullshit after the split happen. Um, yeah, yeah. I mean, I've been here before. It's not my first Nvidia trade. It's not my second. It's not my third. And I just you have to give yourself some time. I mean, could it go back down to, let's say, I don't want to say 45, but I mean 60, 80, totally possible. So I
Yeah.
just want to give myself a little bit of time. But if 100 holds, I think we're safe up here. Um, but that's
And
exactly.
yeah, and I just AVGO was the one I focused on, and you know, 4 times now near 1,200 when it made a move up. So it's sitting at 14 over 1,400. Look at what's happened every time it's gotten up here. So,
Yeah, yeah.
not saying you have to short it, but it will let you back in, and maybe it makes it, it this last drop, went to like 1,300 instead. Um, okay, maybe that's the new low, but it's gonna test that again. All it takes is 2 or 3 bad days, and it'll be right there.
Yeah, I'd rather play that to be honest than Nvidia. I mean, especially in the next 3 or 4 months, just because
Yeah,
the pullbacks and the range are still there, and the let's say the share structure and the market cap maybe are a little bit more friendly to the investor side right now. Um, yeah, they have a chance to kind of take some of the market share away with a good product introduction or with some news, where Nvidia is deemed as they have everything right now. So that's why
well, yeah,
I keep hitting you with Heminex. I mean, that's right. That's
yep,
why. A hundred
yeah,
percent why I keep pounding the table on that. I'm just waiting for you to see what you need to see, because the other ones have more range. AMD's also becoming interesting as the longer it holds 165. So I think there's opportunity in that sector. We just, as you always
Amba
say,
most recently.
yes, you just always,
Yeah,
as you always say, we need a reason for it. So looking for that reason and waiting for that reason. First, it's Monday and I need to trade something sexy.
and I'll say this too. AVGO option flow is like a pamphlet, and NVIDIA option flow is a multi-volume encyclopedia. I can read both of them, but I sure as hell can read the pamphlet a lot
A
faster.
lot faster.
And so I stick to the pamphlet basically.
Yeah, yeah, no, there's definitely a lot going on there, and I mean, expecting the move to be as fast as the move that has just happened is probably a recipe for disaster. You're in a different trade at this point in time.
Yeah,
Um, if you bought when it was uncomfortable, you did well. Trust me, I know. Um, if you're buying when because it looks like it's going to run forever, you're not going to be in as good a situation. And I do want to rotate to that a little bit. That video you posted, I don't know what the mop top's name is, but um, man, that hit the nail on the head right there. It really did. Um,
yeah,
As trading is not about finding stocks or being able to follow news good. That psychology will ruin you, and figuring that out early is very important. And that guy, I mean, he might have thought he had an angle, outside of telling on himself, but he did a great job with what, let's say, 90% of traders run into. You just think your shit doesn't stink or your thesis isn't wrong, and you hold on forever. And his chart of his trade, you could tell he just made one or two bad trades and never
yeah,
let go. He didn't have a one step forward, three step backs for 6 months, because that won't happen if you have rules. Um,
yeah.
and that's why I stress that stuff regularly. And if you can't if you can't be comfortable with, I mean, look, let's just use Nvidia and myself. I'm fine with that. But I sold that pre ER in the mid sevens. I mean, it's done way better since then. And if I'm sitting here sulking over that or trying to chase that again, it's gonna kill me. If I move on to the next trade and I just take profit again and again and again and continue my work and follow my rules, it doesn't matter how much it runs. It's back to my Wall Street analogy. I want a bunch of room in the window. I don't want to hit the top and the bottom of the window every time. Just enough room to get what I need out. And that's more important to longevity in this. And you do learn it along the way if you have any money left.
Yeah.
And that's, I mean, a lot of people, that's what it is. They hold on to everything. That's why sizing is important as well. If you're full porting everything, all it takes is one mistake or one psychological mishap and you're done. If that's 10% of your account, you can recover from that. So it's just
Yeah, and it's
the market right now isn't kind to people that are greedy. Even though the market is looking like bullish and running at all-time highs, you still have to take your money and then kind of move on to the next one or just move on to the next plan.
and meme coins and options being the most popular thing for the people because of the returns you can get.
Yes.
A lot of survivorship bias there. So like the big multi baggers, they're not seeing the 10 that flamed out. That's why in that ER page, I just keep saying like Do the same exact size every single time. Don't win big and then go bigger the next time. Because you want to be comfortable with the loss, and whatever, it flames out, you move on. Because the wins are pretty big. Just had one, Vail Resorts went down like 15%. It was like 7% above its expected move. Options went crazy. So don't take your 100 that went to 900, and don't now put 900 in Adobe and think like you're just going to compound it that way. Not really how it works. You got to stick to the same thing every time. So even rules within the riskiest assets. I don't care if you're a sports gambler,
Sure.
like you have to have rules, or you're just gonna wipe yourself out.
Yeah, I don't. I mean, I think it takes time for people to change bad habits.
Yeah,
Um, and I mean, I don't know from a learning side if it works or not, but I mean, a lot of people stress having some runners, or I got a runner. It's more of a brag. We stress runners as being free shares or free option positions. That way, you're not financially getting ruined at the same time you're wrong. If you do want to
yeah,
hold on to something, but I still don't know if that switches the psychology enough on people that to say, okay, I did mess up and I could have just took that money, um, because they didn't lose anything with free shares, right? They still feel like they're a winner even though they won 60% of the trade and they lost 40% of the trade because they held on to those runners too long. But that's the only way, unless you're constantly funding your account, is that free share mentality or one or two free options to kind of preserve yourself through that learning process. Um,
yeah,
and I think Carlos said it last week. Shout out to him for always having good points. But he was like, "Oh, I wish I would have held it." Well, what'd you have? Well, I only had one contract. Well, how the hell are you going to hold one contract? Like again,
yeah,
that's your money. You got to have four or five of those things, or you're just not in that position. That's not the plan. The plan is to just make a little bit of money and fill that cup over and over again. And that's probably why I never got into options, to be honest with you, because
yeah,
your time is very limited to let that process happen. So I do see people on that cycle over and over again where they do get two or three wins, and then it gets real quiet because that holding hope outweighs the I'm quick when I'm wrong, or I'm just going to fill my cup. And that's what you have to make it in this game in the long run, in my opinion. You have to quick when I'm wrong has to be a thing. I can re-enter, and
yeah,
keeping some free shares and filling your cup on the other side of it, over and over again. And I just looking for that big winner for me. Um, yeah, kind of set you up for failure. Let that winner come to you.
yeah. Absolutely. So before we get to spy, what was your view from the cheap seats on GME and all that stuff?
Um, I didn't really get to watch the volume as much as I would like to kind of make a point on that, but when you hold the high or low, you kind of, for me, that 1914 number, when we just didn't break down to it, I kind of knew there was going to be another good day. Did
Yeah,
not think the good day was going to be 70 or whatever it was pre-market. But we're just kind of stuck in a channel where there is some buyers that are going to prop it up, so to speak. They're anticipating that we're going to have another run in this thing. Um, the price point's real good for that, right? $20. I mean, who doesn't got $20 on
yeah.
a GME lotto ticket, right? Who doesn't?
Right,
Um,
right. Yeah,
who doesn't? So I mean, it not being up there where it was a few years ago kind of gets people excited on it again. I think, to be honest with you, P, I really think the settlement thing is probably the reason behind it. They
yeah,
gave they
yeah,
gave them plenty of time to figure it out, um, and I think enough people are holding it where they can't figure it out. It's definitely, retail's still there for the most part, and there's some big whales that are not protected or have their ass out still on this, even though it's 2 or 3 years later. So I don't think it's done. Don't think it's going to 400. Um, but the range, let's say 25 to 70 or 25 to 60, it's still very tradable for people. Um, you know where I'm looking this week, though. I got questions on the
Yeah,
other
yeah,
one,
absolutely.
so
Yeah.
that's not for any that's
That's
not
fun.
random.
No, I'm with you, and I've been there too. And then one more thing before Spy. GME did the offering, and when Goose was talking about people are churning through this offering mechanically in the stock market, what tell people what that is? Like when they drop all these shares come in, and we'll be like, they're eating up these shares. What's happening mechanically in the market when that happens?
Well, there's a few kinds of offering. There's like for lack of better terms, to simplify it, because there's probably like 6 or 8 different kind of offerings. But there's private and public ones
Yeah,
where they just put the shares on the market, and then there's the ones that are private where they kind of just go to certain people or certain funds agree to buy them at certain prices.
hmm
I think they're doing everything they can to keep this thing price controlled, and that's what we're
yeah,
seeing with these offerings the whole time. What was God, I forgot the name on the AMC one, but they just started another ticker and then converted those shares over. So
yeah,
it's usually it's supposed to be a way to get money for the company. That's really what the offering is. They don't need the money; they need the shares because again, their ass is out in the wind. So I didn't read that offering, but I'm assuming they'd never hit the market. I'm assuming they never even hit the market. They went to those people that asses are in the wind currently.
gotcha. Oh, to cover
Yeah,
short positions. Okay, yeah,
yeah,
yeah, and that's the explanation for some of the goofy after hours candles you see. I think that last for a fraction of a second or whatever. There's a lot of stuff changing hands. You see it in options where it's like a hot potato and they're just passing around these in the money contracts back and forth. And there's just so many people that read options that don't know what not to look at, and and they focus a lot on that.
yeah.
Um,
I don't
all
know
right, so
where I don't. I mean, I wasn't here. I really wasn't into it until it started moving. Like I said, it was $17 when I got into it, but it came from like 3 or 4. So I really don't know where they were positioned on the short side. I assume it's either this 19 or this 39 number, because
yeah,
that's where our historical level is, where a lot of the activity is at. Um, so for me, they still want to. I mean, we're like 4 years later, and they're gonna break even. That's not a good thing for those people that are in charge of money. That's not a win at all. If you ever watch
right,
the Big Short, that's a good example of how those guys think, right? Like time is literally money, and if you're losing it, you're gonna get fired. If you're breaking even, you still might get fired. You need to be making money, and a lot of those big fish aren't making money on the GME because they were short long on them.
yeah,
they're not going out of business, obviously, so they didn't win that fight. Um, COVID happened, and that really didn't kill it. That helped it. So I think they're just the tables are upside down on a lot of those people. Um, yeah, yeah. No, it's a big can of worms, but you just play the volatility and you don't be greedy. I mean, again, I'm not holding GME even to 100 right now if I'm playing share side, but you can get 30 to 50% out of that thing just on one of these candle spikes on a high volume day. So follow the volume there, because it's pretty easy to see when there's activity in that thing. I mean, it goes like 4x the normal volume.
yeah. And if I post a bunch of option contracts and I circle the implied volatility, I'm usually that's usually a warning sign for you to know that you're in something that has 800% implied volatility, and that it's not where you want to be for very long. I'm not saying to not trade those because they do move pretty well, but yeah, I'd say Goose reads it way better than you do to the room right now.
Yeah,
Goose reads
100%.
GME better than you, and Goose has one of those. contracts.
Exactly.
So don't buy 10. Don't buy 10 of them.
Exactly. I did want to make a because it was one of the only things I did this week. But if you guys don't have enough pay, and this is more for our room than the random listeners, but if you don't have enough patience to wait on something like Coors, that's just the most recent one. Enough patience to wait on something like Lyft. That was probably the best one, beginning of the
Yeah.
year. If you just don't have that patience to follow those reads that we know, and at least take a percentage of your account or whatever and do a longer term swing trade, get the sizing right and just wait for it, then scale out on the pops. We're just not for you, because that's what keeps the lights on around here, not the home
Yeah.
runs. The home runs are nice, but it was real fucking nice to be just hanging out, wake up, and I'm up like 40% on something that I held for a couple weeks. I didn't do no work. It was work I already done. And I think we find a lot of that just gets overlooked because it's not today. It's gonna be next week. Say the same thing with gold and silver. Like, God, it was ugly when we first started talking about it, but there's no way you're still not bagged if you're holding on our silver and gold positions. There's just no way. So for me, that's got to be the not the bulk of people's trading, but you got to have the swing department currently, or you're just missing out on a lot of what we do. And for
Uh,
me, for
yeah. I
me,
mean,
that's kept me going the last 3 or 4 months, because I was trying to take a step back after that big dub on Nvidia, and I've done probably better with less work, just being patient. So, hey, big kudos to you because you find that shit. I mean, Core's chart it's a kind of IPO. I don't have a lot of information, um, but when it lines up with our system, you just hang out in that if you can.
yeah. Coors, the whole time that it wasn't really doing much, coin went 190 to 220 to 200 to 220 to 250, and like so holding coin through all of that, especially options, wasn't really feasible. So that was like my day to day notes thing. But yeah, cores you could just park some money there, wait. IREN, same deal. And my whole thing on those was like it's for the fall. They're in these way out of the money positions for the fall, so you don't have to get those options, but just know that's where they think it's going. And so your $500 in cores goes a pretty long way when it pops like that.
Yeah, it was like 450, but in general, like and just the full disclosure so people understand how I think, like I bought this when it was ugly, and I didn't get 758, because I was probably hungover in bed in Vegas. But
Yeah, yeah,
but when I woke up, I was still up 50% and took my money. Thank you, sir. Move on. and
yeah.
and
Right.
it's just that work of kind of hanging out and trusting the process that I think a lot of people are missing. That it's becoming more eye opening to me as I slow down a little bit, just because of what life threw at me the last couple months. But um, I get it. Day trades are sexy. I love day trading. I love catching a runner on a day trade, right? And taking half out at 50% and letting the rest ride, and it just runs the whole rest of the day.
Yeah,
I love to do that, but that's not what keeps the lights on. That's not what makes my account go up. What makes my account go up is the long term thesis, swing trades with just the best entry that's never coming back. That's, to be honest with you, easy to manage.
yeah.
Um, one last thing for SPY PPI. You got any and some Fed talk this week? You got any thoughts on that?
Um, yeah, I think you just want to kind of just protect your neck intraday, but I don't expect that to make a profound, lasting market direction. Either way. So, so I just be careful what you're in when it happens, or if you are someone who likes to trade spy, there's some opportunities there when it's making that move. Um, just usually you just don't trust the first move, and
Yeah.
then you
Yeah.
kind of go from there.
On PPI, I'm looking for that to, I mean, obviously be positive for the companies that are a little bit in bad spots, that they're figuring out their supply chains and whatnot, and it is becoming not affordable. I don't know the word I'm looking for, but it's becoming a better environment to do business in instead of breaking even and keeping market share, which kind of feels like what a lot of the manufacturers are currently doing. Then with the Feds, I really think if they give any clarity on interest rates, not that I think it's going to be this time, I'm probably 50-50 that it's going to be this meeting. But as soon as they
Mhm.
give clarity on rates, like if they came out and said we are going to make a cut this year, we just don't know when and how many, I think that sends the market. I think that it really does because we're gonna go from where we're kicking the can down the street and the market's pouting to um, the market thinking that we're gonna be on the other side of it. And I still kind of think that inflation isn't not cooked in, but it isn't priced in to stock prices yet. If the dollar is 20% inflated or 30% or 50% inflated, um, stock prices haven't done that yet. So I think that has to match or level out eventually. So that's where I think the upside would come from on a lot of these names that feel like they are overvalued already. Um, I think they still do get another bump from that, even the big guys. But we have to be on the other side of this rate debacle before that happens, in my opinion.
Yeah, absolutely. And the rate narrative will be more bullish than the actual cuts. I'd be mindful of what you're in when the cuts actually happen, because
Yes,
I mean that to me is when you get kind of just the air out of the balloon for a bit at that point.
I couldn't agree more. I think there's a couple sectors that maybe respond well to rate cuts, like your banks and your real
Yeah,
estate, like the actual cut, but you're 100% right. The lead up is going to be way better than the actual cut. And I think we've seen that before, just inversed on the other side with the increases.
yeah, absolutely.
Perfect. Spy, big weekly candle. We didn't have a session last week, so I don't have numbers to go off of. But all time highs again. Not that we're getting huge range to the upside, but we're still continuing up after that last pullback. Um, yeah, 550 by the end of the year doesn't seem crazy now.
Yeah, I know, and it's hard to get any kind of sustained selling. It just pretty much doesn't happen. So, so you cannot be looking for it. I mean, to me, a big pullback. I got to see what I saw in the last one in April when I did see 500 the 500 puts kind of get really active. At this point, that would probably be 510 to 520 somewhere in there. Um, just not really seeing those, so it's kind of just kind of more of the same. We grind up, we pull back. You get your early morning sellers, and then you just see how the market responds. Zero DTE options are still kind of moving the thing, and they're mostly on the call side. So yeah, you just got to be careful. I don't have a lot of downside to talk about. Probably I got like 528 is an area that I might look at. Anything under 530 is probably going to get bought up pretty quick though. Uh, so well, let me give you a number. All right, so I've got I'm gonna say 527.04 be my downside, and then I don't think we quite get to 540, so I'll say
Hmm.
538.56.
That's hilarious. I already wrote my numbers. I'll spit them out, but then I'll ask a question. 538.69
Yep.
is the top, so we're literally 13 cents off on the top. And then I went with the 20-day volume profile right here. That's 529.34. I agree with you. Those below 530, it's just going to get bought up. You can see it. The chart's kind of been doing that the last few weeks on psychological levels. My question, or what I input I'd love from you, is more on the timing. I think we were around April, and it was a lot of activity in September
Yeah.
Where's the activity right now? Is it still September, a shorter range, or are they kicking that can down the street, or like where is the bulk of their activity happening? Not necessarily on price, but on the timeline.
December.
So they
So
are
12/20.
so they are
Yeah.
so they went from a September cut to a December cut. It's kind of what
Yep.
it seems like. Okay, okay,
Yeah. So
that
it's
makes
I mean
sense.
the contract that has kind of the most muscle behind it right now is 480p for December. Heavily sold at the moment though. So
Yeah, they are. They
and so
always
you look at
push
that.
that way out of the money. That's so crazy.
Yeah, they do because they're well. I think because it's under $400, so it's like you can find a buyer for it for someone who's like, what
Oh,
would
okay, okay.
what would a sustained pullback in the market for 3 weeks? What would it look like? And so at that contract, if we were to if we were to retest 500, that contract would more than double. If that happened 3 months from now. So that's kind of like the option swing trader with the smaller account who wants to buy something and is, wants to have a bearish hedge or bearish look on SPY. What does a whale feel like? What can I sell them that I can get out of it if it goes against me, or I can slowly bleed it out, and so that would be the one.
So you're one of the only people that I know, and I say this as a not a jab at the room, but kind of a step your fucking game up if you want to make some calls in our room. You're the only one that I know that reads flow, and it's not just like, look, there's a lot of volume. Yeah, no shit. Well, what's that volume mean? Who's it coming from? Are they buying? Are they selling? Tell me what that means, which you're great
Yeah.
at. Would you currently say that the whales are using their position as free money flow, like selling contracts, or are they buying to protect their neck right now, or something else? What do you see currently is going on with them? Like
They're
the bigger buys.
Yeah. So they are slowly going risk off.
Okay.
So like they're using their leverage in these multi-leg positions um, to protect themselves while still benefiting from the upside. So they're trying to squeeze the last bit of blood from this stone or turnip or whatever, and they just want to get as much as they can out of it, while acknowledging the possibility of it going the other way. And so what happens with those contracts is they are they will sell to close the put if things start to pull back, and then they'll rebuy it. So like they'll use the same exact contract that they sold someone, and they will close it out and then buy a bunch more of them.
Interesting.
So
But it's
so
usually
they'll then
it's usually to the downside currently.
exactly, yeah,
Okay,
and it's
that
all
makes
puts
sense.
like so. And for the past year, the top 20 or 30 contracts on SPY have been puts. So they're operating through puts is kind of what they're doing. And I think that they're the trade themselves, like they're in Nvidia and Microsoft and whomever. um, they're buying calls on them and they're selling puts on SPY instead of buying calls on
Okay.
SPY.
Okay. No, that makes sense. So I think my last thing I'll say before we check out is, I mean, I know it's a fucking Kramer line, but it's going to be true. I think it's going to be true until September that Bears are going to win, Bulls are going to win, and the pigs are going to get slaughtered. They just are.
Yeah.
So you gotta be mindful of just filling the cup currently because that you're going to have volatility inside of an established range. Even if that range is still in an uptrend, it's just not going to break out on you right now. So looking for them home runs, especially in a SPY trade, probably not going to happen. Um, but you need to have 5 trades for your 500%. You're not going to get that in one trade currently on a SPY trade. That's kind of how I see it.
Uh, Yeah, and if you want to take SPX 500%, make sure that it's $30 you're putting up and not 300. So,
Pac's gonna be a lifesaver for you guys. Let me just say that,
yeah,
because
yeah, for sure.
he trades that way. He just hits it over and over again. Um, and Goose to a point too. Goose might just be a little bit better at moving the stop up than Pac. Pac don't fuck around. He just cuts the bait and runs, um,
Yeah.
because it's repeatable. Perfect. Ready to get to work? You got anything else? You ready to get to work?
Yeah, I'll grab a coffee and we'll go from there.
Perfect. Like and subscribe for more.